Welcome Forex traders to this video analysis from Admiral Markets, where we take a look at the usual currency pairs as pound dollar, euro dollar, especially this week from a fundamental point of view. Going to be very interesting to see what happens with the ADP, NFP and unemployment rate figures for the US. But of course, this video mainly focusing on technicals and these pairs. Before we do that though, this disclaimer explaining that the material here is intended for a global audience. Please take into consideration that the info in this session may not be suitable for everyone. To get the corresponding information on charting conditions and other details, please visit admiralmarketsglobal.com, select your country residence, and contact an appropriate entity. Also, trading for exchange and global financial markets is considered high risk, and it may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational and informational purposes only. Thank you for your attention. This week we're going to take a look at the webinars. We have weekly Forex recap on Monday, Tuesday, and Thursday, live trading labs. And Wednesday we specifically focus on strategy. The Thursday Pro Learning Lab is taking a look at Forex Guide in August trading, and then we have a couple of week break before we continue with the Pro Learning Labs. First thing to take a look at is the euro dollar weekly chart. Last week we had a very bearish candle. Yet again, in fact, that was the second one compared to, or the third or fourth one, in fact, getting into a very serious downtrend mode here on the daily and weekly. We can see, for instance, price breaking through two support trend lines indicated by the orange color. The question is this the break of a rising wedge like this, and therefore a reversal sign, and therefore some downside pressure mounting up for the currency to fall maybe to 127, for instance? That is the main question. We're not totally sure as yet. Obviously, we did break through that rising wedge indicated by these green lines that I want to draw here on the charts. For instance, here and here, obviously we broke out of that rising wedge. Still layers of support though at the moment. For instance, this bigger trend line here, where price is at, and of course the 133 support level. So it's not 100% clearly reversal territory as yet, but price is pushing through to that zone and it's getting closer. We obviously had a very big fall here on the daily, corrected up to the 38.2 fib. So it all depends how much steam there is on this downside. Is this just an ABC correction for more upside to come, or is this indeed more of a reversal territory? If it is reversal, then we should see a strong follow through to the downside, and especially if we poke through and continue on this 4-hour chart. As you can see, this 4-hour chart in a fast downside here, then we might see that downtrend indeed fully established. This is the hourly. You can see very nice channel as is. So to summarize, definitely downtrend pressure. Question is, how far can we go in this downtrend channel on the hourly chart? If we indeed start to push through the 134, 133.70 zone, then we should have some decent bearish follow through. There's of course the option also that we don't get there, and we could see then a correction to the upside if we don't, and we break above the resistance line. If we do that, instead of continuing down, we might see a correction above 135 for some, or especially above 135.50 for a further correction, maybe to retest 137. So those are my lines in the sand regarding the euro dollar. The pound dollar is still heavily entrenched in this uptrend channel and is now at the bottom of that channel. Obviously, if we break through that channel, it would spell a potential reversal, so that we could see a follow through to the downside, maybe to retest the weekly bottom at 166.90, roughly 167. And if we break obviously through the weekly support, then there could be even more bearishness in the market. If we bounce, however, at the bottom of this uptrend channel, then we have potential to continue with the uptrend, especially if we break above 170.40, which is the big weekly resistance slash support, depending on what time frame here. We were resistance, we were support, now it's again resistance. All right, so if we break above that 170.40, we should see bullish potential. So it's all about this channel and whether we see a break or a bounce at the bottom. The AUDUSD had yet another struggle around that 94.50 level. This is approximately the fourth time, I believe, or fifth time even, and we are remaining in a sideways consolidation zone between 94.50 and 93.30. So those are two levels basically that I would like to see broken before I anticipate any trades. A break below green line, we could see a move down to magenta, and obviously a break below magenta, we could see more bearishness. Really, to get more bullishness potential, a break above the top, we see maybe some space up to the 886 fib. So it's going to be interesting to see which side price breaks out of. Also, we can keep an eye on this trend line like this, for instance, and we can maybe even move it like that to have more hits on the bottoms, such as a line like this. And you can see that's a support trend line. Plus, if we put a trend line like this, we can see maybe a bit of a rising wedge pattern, and therefore bearishness may be more potentially possible. But it's all about these two zones, basically the red and the green line for me at the moment, and that would indicate the break of the AUDUSD out of this consolidation. The dollar yen is in a similar consolidation, lasted already more than a half a year. In fact, all the way from here has gone sideways. Most recently, we have broken maybe out of a resistance line if you put the line like this, or if you put the line like this, right? We had basically a double bottom at the 888.6 fib. Which fib is that? Well, if we zoom out to the daily chart, you can see here, this is double bottom, and this right here where I have the blue circles is a double bottom at the 886 fib, 88.6. So not only that, but we broke out of the golden trend line to the upside. So maybe some retracement to higher grounds to test, for instance, 103, maybe as far as 104, although that is seems quite high at the moment, are targets to think of. But obviously, considering the lack of volatility, the sideways move on the dollar yen, this pair is not all too interesting. Well, traders, thank you so much for joining us today. We hope to see you in one of the webinars this week, and wish you all great trading and a good week. Cheers.